I'm going to show you guys how to trade the market maker buy or sell model live. I'm in a live trade right now. I'm looking for price to start expanding towards this 15,539 level. I'm viewing this as price being on the buy side of the curve of a market maker buy model, and now it's targeting these old highs in here. If we look back on the 1 minute, you can see that we did have these two levels of sell side liquidity. We also had the sell stops over here. At 9:30, I was looking for a Judas swing to take us down, take out all the sell stops. And once I saw this 2022 model at the sell side liquidity, right, I entered, saw the bullish fair value gap, and now what I'm doing is I'm holding for buy side. Now I think it can go above these highs, but on this specific account that I'm trading, right, I'm just doing low hanging fruit targets for this one. So I could potentially hold higher if I wanted to, but I don't need to on this. So I entered after we saw the 2022 model at sell side liquidity. I have a higher time frame bullish bias. That's important to note here. That's the reason why I'm favoring the bullish setup to play out. So I'm looking at this as the smart money reversal as it's on the buy side of the curve. Things like fair value gaps, BPRs, order blocks are going to act as support, and price is going to expand off of there. So notice how I retested this BPR and then expanded away from it. I don't want to see price come back to this low right here, and I want to see it start to expand for this buy side liquidity above. So the reason that is because price already repriced to the FVG low and expanded higher, making this an intermediate term low. Price is not going to want to do something like this. It's not going to want to run back on those lows. So I'm thinking you just run straight for the buy stops here. So as price is on the buy side of the curve, you're looking for price to disrespect bearish PD arrays and respect bullish PD arrays. So see this little purple area? Notice how price created a bearish fair value gap there. I like how it expanded through it, creating a bullish fair value gap. That's a big sign to me that price is not in a sell program, rather in a buy program. So as price is retracing back down here, I'm saying in my mind there is a higher probability chance that it doesn't run back for these lows because it already repriced to the FVG low and left that area. So now this is a rebalanced price range. It's important not to think in absolutes. I think it's easy that since ICT talks about the markets being algorithmic that we think, all right, it has to do this. But it's still important to have a probabilistic mindset where we're saying, all right, it has a higher chance of doing this, but the outcome is uncertain. And even if I'm wrong with this specific outcome, it's not going to affect my trading because my edge plays out over a series of trades. These are positive reinforcements that you want to be telling yourself as you're in a trade. You don't want to be sitting here going, all right, if rebalance the fair value gap and expand it higher, it has to head for the buy stops. That's not what I'm saying. I'm saying it has a higher chance of heading for the buy stops based on the signatures that are currently presenting themselves on the chart. So those are things that I like to tell myself. Typically, as it's on the buy side of the curve, and if I'm long down here, you can see I bought one contract. I'm not looking, in the beginning of my ICT trading, I was on the chart looking for every PD array to get respected and then expand off of it. But now I just place the trade and I'll just leave unless I'm making an execution video or if I'm doing something like I'm doing right here. For this specific example, I'm just kind of walking you guys through what you'd want to see on the buy side of the curve. So as it's retracing back down here, notice this order block. Price, I'm thinking it's going to want to respect that and then expand for the buy side. So I'm going to mark out the open and the upper wick of that. And I'm looking for price to expand straight into that 15,539 level. And you can see buy one at 15,490. Those are my executions. I'll even click the executions button on and off. Some people think people Photoshop this stuff, so doing this to prove to you guys that this is not Photoshopped. If you guys are interested in seeing me call the market real time, I do have a Discord server, which is the first link down below. The exact same trade that you guys see me in right now, I did post in my Discord at 10:03 a.m. I just kind of alert members where I think price is going to head. It's not a signal service, but I'll tell you guys where I think the draw on liquidity is. So I said we have a 2022 model at sell side. Looks like it wants the buy side liquidity. This was at 10:03 a.m. Discord members knew price was going to draw into that level beforehand. If that's something you guys are interested in, it is the first link down below. So again, I could hold past this high at 15,539, but on some accounts like the one I'm trading on right now, I just do low hanging fruit targets. What I forgot to mention is that you can draw a standard deviation from this swing low to this swing high. And I'm projecting that -1 and also some other standard deviations above it, these are aligned with that buy side. So since price is expanding for that -1 and the buy side is right on top of that level, ICT talks about it as a stronger probability of drawing towards that area. Again, think in probabilities. Have you heard me say it all? It has to do this. It must do this. Those are things that you want to stay away from in your trading. So this BPR right here, this is a reaccumulation leg of a market maker buy model. If I were to put some lipstick on it, this is the low risk buy. This is what I bought. I'm in a live trade right now based off of the low risk buy of a market maker buy model. Right? Smart money reversal, low risk buy, pulls up higher, trades into this order block that is a leg of accumulation, retraces back down into this order block again. We have reaccumulation, traded higher, traded back down into this BPR. We have another leg of reaccumulation. When price is in a high resistance liquidity run, typically you will get multiple legs of reaccumulation. That's potentially possible. More times you'll just have a low risk buy, accumulation, reaccumulation, but it is possible to have multiple reaccumulation legs of a market maker buy model. So I want you to look at this bullish fair value gap. Price closed beneath it, expanded above it, and now it's retesting it again. This is a reclaimed bullish fair value gap. So this is a bullish sign, especially when price trades into it, wicks it, and then expands away from it. Now I wouldn't even want to see price go beneath this orange shaded area. I just want to see it expand straight for that 15,539 level. So here I'm going to trail my stop below the low of that BPR. I'm not anticipating for price to come back beneath that low, and if it does, then my draw on liquidity is likely wrong. So I would not want to see it trade back beneath there. This is how I am managing the stop live. So this is not financial advice. I'm not telling you this is where you should trail your stops at. I'm just showing you guys where I am in this market maker buy model. So ideally here, I'd want to see price respect this order block and expand into the buy side and not even return to this fair value gap. Because what did it already do? It retested it, expanded away from it, and left relative equal highs. Now it's returning back down to an order block. On the lower time frame, this is a high probability order block. On the higher time frame, there is no fair value gap after the order block, so it doesn't appear to be one. On the lower time frame, like a 15-second, 10-second, this is going to look more significant. A gem for you guys: order blocks must have fair value gaps. If they do not, it is not a high probability order block. This, on a lower time frame, is going to be a high probability order block. And why is that? Because if we drop down, notice how it does have a bullish fair value gap in there. So I don't recommend trading on the seconds time frames, but the same concepts that work on the minute time frames do also work on the seconds. So as price is on the buy side of the curve, I'm extending bearish PD arrays and I'm looking for them to act as inversions. So see this bearish fair value gap? I'm extending that. See how price broke above it and is retesting it? This is an area where I'd also like to see price respect and start to push higher. And back to that order block is this entire down close candle. So just because it cut through the open of that, it doesn't mean it disrespected the entire order block. Notice how it cut through it. The entire down close candle is the order block. So price is going to want to retest that, right? This is where it's consolidating, and we have an order block aligned with an inversion PD array. So this is a nice little area where price is likely to consolidate, likely, not 100% going to, but likely to consolidate and then expand for the buy side. Again, it's important to speak in probabilities, not in certain outcomes. So Dan, why did you trade this market maker buy model? Well, my higher time frame analysis is bullish. At 9:30, price traded directly down, creating a Judas swing lower, took out sell side liquidity on the 1 minute and also the hourly time frame. It created a shift in market structure higher with a bullish fair value gap. I entered as soon as that fair value gap got created, and it created the market structure shift. And then it started to expand higher off of that, indicating price was in a buy program. So you can draw standard deviation from this swing low to this swing high. You are going to be on side with smart money when you align yourself with the higher time frame. Now, if you don't, and you just go onto a lower time frame and you mark out random hourly PD arrays or 4-hour PD arrays and look for smart money reversals out of there, it's going to be hard to be on side. It's important to have that narrative and bias from the higher time frame, transfer that into the lower time frame, whether it's on your charts or just in your mind. You're thinking, all right, well, the 4 hours bullish, we're expanding higher. I'm going to be looking for only bullish smart money reversals. That was my mindset today. Only looking for a drop at 9:30 into the sell side Once we got the signature I was looking for, then I was interested in longing, which is what I did right here. I bought one at 15,490. There we go. You can just see that price took out the buy side liquidity above, and that was the trade framework for why I took this smart money reversal. The higher time frame was bullish, right? I was anticipating for price to run sell side liquidity. That's where I'm hunting for the smart money reversal, at sell side when the higher time frame is bullish. As price is on the buy side of the curve, we're marking out bullish PD arrays and anticipating for price to disrespect bearish PD arrays. So I'm just going to do this one more time just to show you guys that this is not photoshopped. Clicking on and off the executions. So that's going to be it for this video. If you guys would like to see more videos like this, get this video to, I'll say, 250 likes, and I will continue this series. Also, what I could do is make a video on where to hunt smart money reversals for market maker models. That's going to be it for this one. Hopefully you guys enjoyed. See you guys later.